we're now going to have a look at the final part of the George example. And the final part is preparing the final financial statement, being the statement of financial position. Now remember, this is the second financial statement which will be presented to the external users of the accounts, along with the statement of comprehensive income, amongst other things. So, our statement of financial position then, you should have a pro forma in front of you in your notes. Now remember, the statement of financial position is as at, so a snapshot at a moment in time of the business's position. Now, we're going to be looking at here the assets, the liabilities and the capital. Essentially everything else on your trial balance that you haven't yet ticked off and accounted for. So we're going to start off then with non-current assets, and these are assets that we're going to keep in the business for a long period of time, generally for greater than 12 months, so greater than a year. So in this example then, that would be the motor vehicles or the delivery van. Look back to your delivery van in your trial balance at the bottom. We said that delivery van had a value of $7,000. Tick that off in your trial balance. That is going to be the cost of the delivery van. Now, our next column is accumulated depreciation, and we're not really going to deal with that now. We're not going to talk about it. It's only been 2 weeks that we're accounting for George, so there wouldn't really be any depreciation that we'd need to take account of. So we're just going to leave that blank for the time being, but in subsequent sessions after this, we will discuss this idea of depreciation in a lot more detail. So the carrying value of the asset at the end of 2 weeks is still going to be $7,000. So you can see then that we have a couple of lines, and essentially that's just to rule off the first 2 columns. So $7,000 is the total of the cost column, 0 is the total of the accumulated depreciation column, and then the carrying value or the book value of the asset at the 14th of April is $7,000. And you can see that we've underlined the first 2 columns. We don't need those figures anymore. We're only interested in the book value at the period end. So, we've dealt with our motor vehicles then, our non-current assets. Now let's have a look at our current assets. Now our current assets then, we have a certain order. Inventory first, then receivables, then cash and cash at bank. We're going to start off with the inventory then. This is the inventory at the 14th of April, at the period end. So remember, this will always be your closing inventory, your inventory asset. So look back to your trial balance. At the foot of the trial balance, you'll notice we did that closing inventory journal. We already dealt with the credit to cost of sales in our previous recording. Now we're going to do the debit, the asset. So tick off the $7,000 debit to inventory assets, and we're going to pop that in to our subtotal column here. Trade receivables then, remember this is amounts owed to us by our customers, and at the period end, that was $6,000. Look back to your trial balance. You'll see $6,000 on the debit side for receivables. Tick that off. We've then got cash at bank, and we said that was $43,550. It's an asset on the debit side. George has that money to spend in the business in the next accounting period. So, totting all that up then, 56,550 would be your total current assets. So we have our total current assets. We're going to add that to the total of our non-current assets, and that should give us $63,550. $550 total assets. And that is the top part of your statement of financial position done. Now remember the statement of financial position. Our assets must equal our capital plus liabilities, which is the accounting equation that we saw earlier on. So let's finish this off then. At the bottom of the statement of financial position, we're going to start with capital, amounts in the business that are attributable to the owners, sometimes referred to as the proprietor's funds. So we're going to start off with our opening capital, and this is the physical amounts that George has invested in the business. Look back at your trial balance. You'll see that towards the top, $50,000 on the credit side, that's the capital. Tick that off. 50,000. We'll pop that into the subtotal column. Now what we've also got to do at this point is give the owners the profits attributable to them. Okay? Essentially the business owes that profit back to George. It's his money at the end of the day. It's his profits. So the profit is what we're going to use to increase George's capital or the proprietor's funds. Look back to your statement of comprehensive income. At the bottom, our net profit was $6,550. Nice tidy profit at the end of 2 weeks. We're going to add that to our opening capital. It's going to benefit George. It's going to benefit the owner. So we add that at that point. Opening capital plus our profit, we will then deduct drawings. Now, drawings are amounts taken out of the business by the owner, by George. George did not take any funds out of the business. Therefore, we leave that blank. But if he did, it would be a reduction in his capital. So, total capital then in our total column, 56,550. Capital plus profit minus drawings is going to give you the total owner's capital at the year end, or in this case, at the 2 weeks ended. Finally then, let's have a look at our liabilities. We're going to start off with our non-current liabilities. This is liabilities that are due for repayment in a period greater than 12 months. So this is things like your long-term loans. Now in this question, George didn't take out any long-term loans from the bank. We didn't really have any long-term liabilities. So these non-current liabilities will be nil. But what we do have is current liabilities. Okay, what we owe in a period less than 12 months. So amounts due in the next accounting period. And all we have left really in the trial balance, if you've been ticking it off, is our trade payables credit of $7,000. So, trade payables, $7,000, is the only item left in our trial balance that we haven't yet ticked off. So that's our only current liability, so we're going to bring that in to the total column. And 56,550 plus 7,000 is going to give us 63,550 total capital and liabilities. Go and look back at your total assets, 63,550. It balances, it works. We're happy as accountants. So there you have it. We have done original transactions all the way through to the financial statements. And that's the way we prepare accounts. That is double entry bookkeeping. And this is essential. You must be able to do double entry transactions, to post these transactions into a journal, to post them into the main ledger, to balance those accounts, and then proceed to prepare your trial balance. And then once you've done that, prepare your 2 financial statements. This exam is all about double entry bookkeeping. You're going to see it not just now, but in every single session that we see from now on. What you must do is learn your debits and credits. It's so, so essential. So rework this example again if you wish. There should be another example just after this pro forma for the statement of financial position for you to have a go at in your own time.